Hello traders, this is Blake Morrow with ForexAnalytix, and you are listening to the week ahead video for October 18, 2020. Hope everybody's having a great weekend. I am filming this just a day early. I'm filming it through the weekend. Obviously, we can still be looking for some headlines throughout the weekend, so just keep that in mind as I go through the analysis. But I wanted to get this out so our team could put it together and get it out to you guys early Sunday. Before I get into everything and what we are looking for into the next week and kind of what happened in last week, I just want to mention, if you haven't tried out ForexAnalytix, it's only $1 for 10 days. $1. Sign up. Do it. Download the mobile app when you do it. You can download the mobile app on the iTunes Store or the Google Play Store. When you try out ForexAnalytix, you're going to get the premium version. It's only $1. And it doesn't matter if you want to use the light version moving forward after 10 days, you're going to get to try out the premium version. So you get to see everything. And you know, the thing that, especially those of you that are active traders, you trade around your work schedule or your day trading throughout the course of the day, make sure you go into our chat rooms. Our chat rooms are located, and let me move this data flash out of the way. It's right here in the upper right-hand corner of the screen next to your avatar. You can go to the chat room, and that's where you're going to find me and a lot of the other team members all day long. A lot of great tools here with ForexAnalytix, so make sure you try it out. And if you want to try to get ForexAnalytix for free for a period of time, make sure you check out our Forex Sponsored tab, where you can open an account with Pepperstone Securities for those of you outside the United States and Canada, and you might be able to get ForexAnalytix for free for a period of time. So check it out. All right. Now let's talk about some of the events over the weekend. One of the main events that obviously we're keeping tabs on is the continued negotiations between the Republicans and the Democrats for continued stimulus or more stimulus for COVID, and those negotiations are ongoing. And one of the reasons why the equity markets rallied into last week, and this is the daily chart, so you can see the rally that we had last week into the almost all-time highs, is because everybody expects stimulus to come. And there's a couple schools of thought here regarding why stocks are stronger, and I'll cover them really quick. The first reason why the market is anticipating a stronger stock market is because we might get this quote unquote what people are calling a blue wave, where you get Biden as president, as the polls are still wide. But look, guys, they're just polls. I don't trust anything until election night or once all the votes are counted. But the polls right now show a significant lead for Biden. So people think that, okay, well, Biden as a Democrat is going to be in office possibly. And the markets are trying to price all this in. And the blue wave is where, House and Senate might be controlled by Democrats as well. We see a lot of Republican seats that are, in battleground states that might be taken. So the markets, the reason why they like this is because they expect, Democrats are going to spend more. They're going to do more stimulus. They're going to enact not only the stimulus packages, but, they're going to, save the airlines and be able to push whatever packages they want through, and that continued spending is going to drive growth and continue the stock market higher. It's interesting because you could really you can argue whatever side you want to and however you want to argue it. The way we have to look at it technically is the markets are bullish right now, and we're not too far from the all-time highs. So however you as a trader wanted to spin the narrative, it's obviously up to you. I think the best thing to do is just take a look at technically what we've got here. And if I look at the S&P right now, you'll see that we're holding this. Here, take the low, the low from September to the highs from this week. Okay. The dip is holding at the previous. This was a 618 retracement, by the way, at 34. It was, 34 45 or whatever. Now the 38% retracement comes in at 34 and a quarter. So as long as we're above this 34 and a quarter, this breakout zone here, you have to remain bullish that we might continue to hit all-time highs. Now, where I turn bearish risk, or where I start to get a little worried, is obviously below the 38% retracement, but more importantly is actually below 3,200. Below 3,200, the market really shifts from, okay, we got a shot to hitting new highs. We break below 3,200. It's like, okay, we're going to go through the 200-day moving average, and we're going to be trading back down, quite possibly below 3,000. Now, can that happen? Absolutely. One of the things that, as we're into the home stretch, as some of you that follow politics in the United States might have seen, like an October surprise, where there's obviously some news regarding Joe Biden and his family and his son specifically, and maybe that tightens the polls, and perhaps that does. I'm not too sure, but if the market starts to sense that, we might see, because polls tighten, we might see stocks start to sell off as people get a little nervous. Why would the market get a little nervous if Trump starts to tighten the polls with Biden? Well, simply put, it's because there's more risk of a contested election result. And I think more importantly is, if Trump wins, a lot of people think, oh, that's going to be bullish for stocks. Well, he might actually be a little bit more aggressive towards our trade partners, and some of these stimulus packages might not get pushed through. There could be a lot of gridlock, if you will. So I'm just gonna say, however you want to look at it, just watch support below 34.25. We start to get a little nervous. Below 3,200, it starts to get a little bearish. One of the other things that happened over this weekend, and I might come back and talk about equities, but probably not. I think we just have to remain bullish here while we're above 3,200, while we're above 34 and a quarter. Those are the levels that I'll be watching this next week. One of the other big events that happened this weekend, there was an election. There was an election out of New Zealand, and Ardern, she won in a landslide, as you would have expected. Now, the one thing that happened is she's going to have 64 of the 120 seats in Parliament, and that in itself, somebody in New Zealand might be able to correct me. I do not believe that's happened where a majority has been had in yet. And so the reason why I bring this up is because some people believe that the RBNZ, the reason why they haven't gone into negative rates is for political reasons. They don't want to make a move before the election. And with Ardern's Labour Party having the majority, that might give them the free rein to actually be a little bit more aggressive with monetary policy, or Adrian Orr to be, so to speak. The reason why I want you guys to watch that is because the Kiwi dollar is, in my opinion, and let me get rid of this old channel here. I don't think we need to view this old channel right now. We need to watch the Kiwi really carefully, especially that we might be developing a head and shoulder pattern. More importantly, is this support right here at 6,500, or 6,500, sorry, 65 cents. That's going to be really critical. There's a major multi-year trend line that we broke back earlier this year, this summer. Okay, you can see right here. I think it was actually in April. So we broke out. If we relinquish the 200-day moving average, this previous trend line, broken trend line at 64 and a quarter, you have to watch for how the New Zealand dollar acts, and you may want to not even factor in the dollar into this equation. You may say, I don't even want to trade the Kiwi, the New Zealand dollar, because I just don't want to deal with the dollar going into elections. That's fine. You can look at other currency pairs, and you might look at some other cross rates, maybe the New Zealand yen, because the New Zealand yen, I'll tell you, has really held up very well around the 200-day moving average. You can see how much support we have, and we've really been supported throughout all summer. We have this multi-year trend line. I know we focused on this a couple weeks back. I want to say a few weeks back when we were trading, over here. I think we're just below 71, and I was like, I actually shorted the New Zealand yen at that point. We'd have to go back and watch some of the week ahead videos. I want to say it was probably about a month ago. Anyway, what's happened though is we're struggling to make any gains above 72. And if we slip back below this 200-day moving average around the 68 yen level, 68 and a quarter, that could open up some downside in the New Zealand yen. And like I said, there are New Zealand crosses that I think you can focus on if you guys are, people that think that that we're going to get a trade or a UK Brexit deal, then look at the pound New Zealand. The pound New Zealand, I mean, this currency pair has been beat up. We're consolidating, pretty well here, and a move, above these recent highs. I think at 197.50, that'd be quite bullish. Then once it gets to the 200-day moving average, it may open up some upside above 2 again. There are some opportunities, especially if you want to stay away from the dollar. You don't want that dollar exposure going into the U.S. elections, which I completely understand. I completely understand that. I mean, I myself, dealing with the dollar, it's really choppy. I mean, you can look at the dollar index. Sorry, guys, I'm looking through all of our charts, and I'm not referencing ForexAnalytix charts, but my analysis, by the way, if you're looking at the ForexAnalytix platform, if you go to the basic technical analysis and you look at like the daily and weekly analysis throughout the course of the week, most of that's going to be mine. And most of the basic technical analysis for all these instruments, especially the end of day analysis, is going to be my analysis. I'm 95% of the time I'm updating it. Throughout the weekends, the rest of the team does, but I want you guys to know that. So for those of you that are ForexAnalytix subscribers, or you try out ForexAnalytix, if you want my take on the analysis, look at the basic technical analysis. The end of day analysis is going to be a lot of the stuff that's updated by me, and the charts that are my charts that I'm looking at. Okay. Now, going back to the dollar index, I really believe that we are range bound until the election. I'm going to just say we probably need to just be real nimble for the next couple of weeks as we head into the beginning of November. I wouldn't be surprised if we just trade within this like 92.50 to 92.50 to 94.50 range. I think that's pretty doable for right now. I doubt we're going to get much direction until after the election. So just want you guys to keep that in mind. Now, I did mention Brexit. The pound. Let's talk a little bit about, the cable here. It's extremely volatile. Look at the daily chart. Look at the whipping around that we've had all week. From 131 down to 129. I mean, you think that, all hell's going to break loose on the downside. Then we get a big reversal. Then we get an outside day. And then we get a doji. I mean, it is gnarly trading out there. So you have to be really nimble. Now, last week, from what we can gather, it looks like, the UK wants to walk away, and Boris Johnson wants to walk away from the negotiating table. We don't know if this is a tactic. We don't know if he means it, but people keep talking about that he may want an Australian style exit. But basically, what that means is a no deal Brexit. That's just a different way of phrasing that. I think we have to be really careful with the cable. I think that we get outside of like the 131 range. Okay. We get outside of this 131 range, then the market's going to be whatever's happening, whatever the headlines that are driving at that moment in time, the market likes it, above 131. We start getting below 129, and I mean, I know we're trading at 129 right now, but we start getting below 129, we really got to start focusing on what the downside risks of, what the repercussions are, and quite possibly of the UK, walking away from some of these negotiations. The market might start getting a little bit more bearish, the sterling in general, and then obviously you got to start focusing on the 200-day moving average that comes in right around 127. Below that, the downside could really open up. So I'm going to go into next week with an open mind. There might or might not be some EU UK negotiations going on about trade. I'm not too sure, but I'll be watching the headlines, and I'll be watching for a possible breakout with the cable here. Excuse me. So anyway, guys, I'm going to leave it like that. We have, a couple major things that are happening here in the next couple weeks. Are we going to have a Brexit deal or not? Is Trump going to retain the White House or not? And obviously, we want to be watching how the Kiwi dollar reacts over especially the next week, with Miss Ardern, Prime Minister Ardern, really, with this huge victory that she's had with her party, how the Kiwi dollar reacts moving forward, because I think that's going to be pretty critical. There are a couple other things that you might want to just look at moving forward. You know what? I'm going to leave you with one last thing before I go. Now, before I go, I'm going to say, if you think that this video is going to be beneficial for you going into next week, make sure you give us a thumbs up. Make sure you share the video. If you saw it via a tweet, or you saw the tweet of this video, retweet it for us, please. And give us a thumbs up button, or thumbs up, click the thumbs up button. And also subscribe to the channel so you don't miss any of our great interviews. All right. So please do that. I appreciate it. The rest of the team really appreciates it as well. Now, one last thing I'm going to leave you with. Gold. Look at this triangle forming. Tight triangle. A breakout is looming here. Below 1880, above 1940. It's 1935. Break above 1935, break below 1880. Then we start looking for some bigger moves in gold. Do we, challenge all-time highs, or do we really start retracing back towards the 200-day moving average? What happens in gold probably will influence the dollar. We might be looking at yields. Keep an eye on the bond market. Yields look like they could start perking up. There are some things that are really winding up, guys, in the market. So for those of you that are ForexAnalytix subscribers, thank you so much for your continued support. I appreciate you. Our team appreciates you. And for those of you guys that are not part of the ForexAnalytix family, we look forward to you being part of us in the future. So thanks. Have a great day. My name is Blake Morrow with ForexAnalytix. I hope you guys have a great trading week. I'll see you on the F.A.C.E webinar tomorrow morning, or on Monday morning. Yes, we'll see you there. Bye-bye.